Hi, this is Dee with Dee Team here in sunny Central Florida, and today's topic that we're going to talk about are the various costs involved in you buying a home. Stay tuned. Hi, welcome back to our another video blog, and today's topic is going to be the various costs that is involved in you buying a home. Very often we get this question from our buyers, and the number one question is the down payment same as closing costs? So let me explain to you the difference between the two. The down payment is the money that you actually need to put down to be able to buy a home. So that down payment is basically just the cost that you need to put down. It has got nothing to do with your settlement charges or the closing costs to speak. Let me give you an example. On an FHA loan, which is a 96.5% loan to value, so if you are buying a house for $100,000, your down payment for that specific loan is about $3,500, and you're getting financing for 96.5%. Now let's talk about the settlement charges. Well, those charges are the charges that you have to be out of pocket that you need for costs such as origination, appraisal, inspection, escrow charges. Those are the fees that you actually need, which is separate from your down payment. So when you are looking to buy a house, you need to look at the two costs. Number one is what you need to put down and what is that it's going to cost you to get that loan so you can buy that house. There are some loan programs that will roll that closing cost involved in there. However, we have also successfully gotten closing cost help from the seller. So all you have to do is get the down payment. So there are different ways to go around it. Now let me just talk about how much money should you spend on buying a home, because it's exciting time. You did your homework, you went on blogs, you saw videos, you read things, and now you're ready to buy, and you are, guess what, pre-approved. Well, congratulations. But I wish it was as easy as that, because there are still so many things that you have to be aware of so that you don't end up spending the money for inspection and appraisal and lose that money because you haven't done the homework, and it's actually not your fault. You should have a competent agent and a mortgage broker who can guide you through the process. So what we want to do is that we want to be able to get you pre-approved, but at the same time make sure that everything will follow through. So when you are going for a pre-approval, most of the lenders will just look at what you have told them, maybe pull up your credit and ask for some of the paperwork. If you want to be really, really sure that you are as good as cash, then you want to be able to get some sort of a loan commitment or a desktop underwriting approval. The way you do that is you submit all your documents to the lender. They check everything out, put your loan as if you already are buying a home and have bought a home through an underwriting desktop process, and it will spit out approved, eligible, or non-approved, and based upon that approval, there would be conditions that you would need to meet that you would know upfront. And we do this for all our buyers so that they don't end up buying a property and losing the money for inspection and appraisal, because that alone could be over $1,000+. And more so the heartache that you would have when you have fallen in love with the property and only to find out that the homework was not done completely and you find yourself in a situation. Now those are the things you want to be able to look into. Now let's look at affordability consideration. What you want to also do is you don't want to be a house poor. And what I mean by that is the term house poor is where you put everything in buying a house, but then you don't have enough cash to run your household. So you want to basically buy a little bit below your means. You want to make sure that you budget to what you can easily afford, considering all your other household expenses. Now, there are loan programs, and it is very difficult for you to get a loan if you're not approved for it. But there are also a few things that you want to keep in mind, and I'm going to discuss those things with you. So let's dive into it. You want to look into it from utilities. That's the very basic. You're living in a 3-bedroom, 3-bathroom apartment, 1,500 square foot. Now you're moving into a house, which is totally a different ballgame. You're moving into a house that's probably 2,000 square foot. So the cost of running the day-to-day utilities would be a little bit more. as compared to what you are used to. Other things that you may also want to look into is homeowners insurance, because when you are renting, all you got to do is pay your rent and be done with it. However, you have no benefit whatsoever. But when you are buying, there are 6 costs that is involved: principal, interest, taxes, insurance, PMI, and HOA. Now, if you are putting 20% down, then you don't have to worry about the PMI. So that's not going to be something. If you're buying a property in a community that does not have an HOA, then that's great too. But if you are buying into a community where there is an HOA and you're not putting 20%, then those costs all add up. And what you want to do is reverse engineer to know exactly what you can afford based upon the payment that you want. Now, provided, keep in mind that your principal, interest, taxes, some of the costs are tax deductible, and you should consult a tax accountant for that, because some of the cost is going to really help you when it comes tax time. If you have paid a certain amount in mortgage interest or property taxes, that is tax deductible and it will reduce your taxable income. So there is a benefit of owning your home, not to mention the appreciation that you are getting on the home when you have already bought your home, and you don't have to worry about getting permission and everything. So buying a home is always a great thing, but you want to make sure that you're buying within the means so it makes sense. Another thing that you want to also look into is other expenses related to your financial goals. You may have 2 kids that you are doing Florida prepaid education. You may want to consider that amount, what you are paying. You also want to look at your lifestyle preferences. If you dine out a little more often than regular, then you want to be able to look into that. And based upon those, you want to reverse engineer yourself into what you can really afford, so you don't find yourself as house poor, as I refer that to you. If you have any following questions with us, please let us know. Please subscribe to our channel. We do this video so that we can educate you, so when it's your time to buy or sell, you are aware. We are always here to help and guide you through the process, and we look forward to earn your business and connect with you this year. Please give us a call or text us as 321-945-7351, 321-945-7351, and please subscribe. Do not forget to subscribe. Again, Dee from sunny Central Florida, and thanks for tuning in. Have a blessed one. Bye-bye.